I'm in an exclusive and exciting conversation with Saion Mukherjee of Nomura. Saion, we were talking about the key events that are lined up this year. But I want to move on from that and talk about India as whole. Some would argue that India's biggest gain has been China plus. Keeping that aside, do you think things are now actually changed? I mean, India is at a cusp of big change where it can afford to command FI flows in absolute terms. Or are you still seeing some amount of rebalancing that's taking place where global investors have been adjusting their portfolio by trimming down their heavily weighted positions in India as we go into this year?
So, yeah, I mean, see, the thing is, if you look at, in the emerging market context, right? So China has been a big underperformer. And, there have been other issues in China, as you're aware of. So in that context, in our interactions, I do see, foreigners are looking at India much more constructively. And I think there is more appetite to invest in India. I think that can potentially sort of continue if what we see as the outlook, going forward. So from a flow perspective, I think India would continue to sort of, get its share. And there is an impact of rebalancing as sort of India's weight in various indices, keep going higher. On your question on absolute flows, yes, I think there is a case, but it's a slow process, right? So if you look at the policy initiatives that are currently being undertaken, for instance, we are talking about manufacturing. The fact is, manufacturing as a percentage of GDP today is at almost at an all-time low at around 13-14%. But the intent is to take it up to a level like, say, 20% or 18% over a period of time. So my sense is that, we will eventually get there. It's an initial start. And I think there are reasons to believe there is a policy support domestically and also globally. I think companies are looking at alternatives to China, as a in a way to diversify their presence. And of course, India does present, a strong home market. So all those factors are, I think, positive, and I therefore think that one can argue that India story would sort of evolve strongly over the next 4-5 years, driven primarily by manufacturing.
Will that story be, Saion? We've seen a few earnings and a whole lot of business updates over the last couple of weeks. Now, rural consumption is still not showing a meaningful recovery. When do you anticipate this evening out? And also, do you believe that the story in India right now is more discretionary versus staples, or more appropriately asked, luxury over staples?
Yeah, that's true. So I think, what we all call about a K-shaped recovery, the impact of COVID, right? The growth in India has been, I think, mostly about government spending and affluent spending, actually, So the mass consumption has really struggled. So if you look at, let's say, the rural real wage, it has been real wage growth, right? It has been negative for most of the years, most of the months since COVID. Now, going forward, we think at the margin things can improve. With inflation coming down and rural income in general recovering, I think we may see mass consumption, the kind of decline or slowdown that we have seen, sort of stabilizing and things start to sort of improve. But yes, at this point in time, it's been more about luxury spending and affluent spending, which has been sort of very prominent, and it's also sort of getting reflected, in the stock prices. But we hope that it would sort of get more broad-based eventually over a period of time.
Right. Saion, let's talk about some of the other sectors that have been the biggest talking point in the last, in the last year that's gone by, right? And I want to keep the focus on that because these are reliant on government policies, government initiatives, big order wins, which have driven these stocks to record highs and multiple returns. Is that the space you like? So I'm referring to sectors maybe like defense, railways. Still value there, or are you concerned that while orders are taking place and the market's pricing in a lot of that, execution may somewhere down the line become a challenge?
Yeah, absolutely. So I think, see, as I said, right, I think the narrative is strong. We have seen, very strong initiative and capex. Let's say in railways, in defense, there is a thrust on indigenization, more capex, and even looking at the export markets. I think all that is true. But then the question is, as you mentioned about execution, I think especially, in areas, let's say when we don't have the technology or we are dependent on technology from abroad, we may see some delay in execution. That's going to be an issue, I think, given where the expectations are. And that is precisely the reason I think when we look at some of these names and the stock valuations, we find it very expensive, and that's the key reason. Though we kind of appreciate the narrative that's going to play out, but I guess the valuations are not very supportive, and that's the primary reason we are underweight in that sector.
Right. Also, another sector that saw lots of euphoria in the last 2 days has been the IT sector. Now, I would imagine that while earnings came in and markets gave it a thumbs up, we went in with very low expectations. So you've honestly performed in line with low expectations. Also, what we've seen is attrition is low. Margins have also improved, which is on back of operational efficiency, which usually happens in a slowing down economy. Historically, in the 15 years that IT has done well, margins have actually not been, they've been lower rather. So fair bit of corollary there. Do you feel like the markets are missing the woods for the trees when they look at IT sector?
Yeah, no. So basically, I think there has been a series of disappointment in IT services, and I think the expectations going into the results were quite low. So I think that is the backdrop. Actually, no disappointment itself is a good news for the stocks to do well, I guess. So that also sort of sums up the sentiment that's prevailing in the market. But we are concerned on IT services as a sector. I think the discretionary is yet to pick up, and there is slowdown in the top line, though there is margin support, as you mentioned. And the valuations have again sort of moved higher, and today we are dealing with a much slow growth environment than in the past, and the valuations have moved higher. So to that extent, we are and we continue to remain relatively cautious on that space.